good morning, everybody. Welcome to the October 26th Board of Trustees meeting. Glad you're all able to be with us today. We'll call the meeting to order. Ruth, you got 7:33-ish?
Yep.
All right, I'll entertain a motion to approve the two sets of minutes, October 28th and October 5th, if you've had a chance to review those.
So moved.
Jim moves. Is there, and you're moving for both?
I'll second it.
Tom seconds for both sets of minutes. All those in favor, please say aye.
Aye.
Opposed, same sign. Thank you. Medical staff meeting summary. Dr. Markin, good morning.
Good morning. There's really not a lot here to talk about. I just reviewed this morning myself, so I guess this actually the availability of the monoclonal antibodies that we're using for COVID-19 has changed from going through our regular sources to going through the Iowa Department of Public Health. So they're going to, I guess, dole out whatever resources they have as best we need. But we're still doing it. It still works really well. The pharmacy has to mix this stuff themselves. Give it intravenously. We can give it in the ER. Depends on how busy the ER is, because then that patient has to stay there for at least an hour to be monitored. So we are doing it if we're not terribly busy. Otherwise, we put them on the floor. But the pharmacy has to be available to mix it. So if we diagnose that at night, it's something we have to arrange for the next day. But it is effective, I think. Hard to say. But it seems that those people that we do give the monoclonal antibody do seem to do better indoors. Don't really have to be hospitalized as much. There was this new thing that Karen said I didn't have to mention, this new oral medication. I actually just looked it up before I came up here because I wasn't too aware of what was going on. It's not approved yet. Merck is looking for emergency approval. I think it might be beneficial, and especially for those at-risk patients, if we can implement that upon diagnosis. It's not really a preventative thing.
So it's like the flu?
Tamiflu type thing. It's a 5-day course. Tamiflu I'm not really impressed with at all. I actually feel like it makes people feel more nauseated and everything else, and diarrhea, and then probably reduces your symptoms of influenza by 12 hours. So I've never been a big Tamiflu advocate. There's other doctors and people that are, but this I think is actually designed more to inhibit viral replication, and this can really reduce the viral load in some of these more at-risk COVID patients. So if it does get approved, I'm sure it's something that we'll try. The third dose of the vaccine, the CDC is recommending for 65 years or older of those at-risk patients. The Moderna that most people have in this area is going to be a half dose for the booster shot. I think it's probably worthwhile for those who want it. So we do have an orthopedic guy, orthopedic surgeon that comes here on Mondays now. So if we do have fractures that we want to put on their schedule for Monday, we have to kind of improve the system on how we do that, so there's more communication. That they need cardiology clearance, we need to have that all arranged so it can be done early on Monday before they go to the OR. So it's just more of a process thing that we're trying to improve for that surgeon that comes here on Mondays. I know nothing about the guidance for clinicians caring for Afghanistan evacuees, so I didn't see that handout. Do you have?
It was just information that came from the CDC. We just passed it out to the medical staff for their review. Not really expecting any evacuees from Afghanistan, but in case we did get any.
They're adding some more dermatology coverage because they are busy, which is definitely a good thing. OB has a new MightyVac system. It'd be nice for me to see that, I guess.
Okay. Yeah, I brought it as a kind of a show and tell to the med staff meeting. And basically, Dr. Kelly Anderson, she's our new OBGYN, had used these before and thought they were a little more effective. And
is it different?
It's not. It's instead of 2 pieces, it's 1 piece, so you don't have to hook the pump onto the actual suction cup. It's all 1 piece now.
And that's to help deliver the baby?
Yeah, you know, there's no handles on those babies, so if you have to put one on, you gotta see the forceps or the vacuum, so Us old people are more comfortable with the forceps, but the vacuum is certainly can be life-saving for babies that are stuck and in trouble. Sure. So it's. Any questions for me?
Thank you.
You bet.
Thanks for joining us again, welcome back. Thank you.
I do actually would come to these, but generally when I'm not here, I'm in the emergency room, so it's not my fault.
We understand that.
Okay.
All right, the quality improvement report, Ian is with us. Good morning, Ian.
Good morning. I wanted to spend some time talking about one of our top quality measures that we've been monitoring for a couple of years now, and it's called controlling hypertension. And so high blood pressure, which is also known as hypertension, is when the pressure in blood vessels is higher than normal. And so there's two numbers that go with high blood pressure, or the definition of doing your blood pressure. The first is the systolic blood pressure, and that's the pressure when your heart contracts. And then the diastolic is the pressure when your heart relaxes. So it's usually like 140/90. And that's actually the goal that we want to be below, is 140/90. So the causes of hypertension is multiple. It's based on genetic predisposition, environmental risk factors, being overweight, sodium and potassium intake, physical activity, and alcohol use. So how common is hypertension? So actually, the CDC reported that 85.7 million adults above the age of 20 have high blood pressure. And 67.7 US adults above the age of 60 or older have high blood pressure, so it's pretty prevalent. High blood pressure is also known as a silent killer, and the important part to know is it increases the risk of heart disease and stroke, which are the two leading causes of death. A person who has high blood pressure is 4 times as likely to die from a stroke and 3 times more likely to die from heart disease. So you can see the importance of managing and treating high blood pressure would reduce that cardiovascular disease. So we are a part of an accountable care organization, and so they have a goal for a percentage of patients that have a blood pressure below 140/90, and their goal is 77%. And so our performance for the first 9 months of this year is 82%. And I'm not talking just a couple hundred. These are thousands of patients that we have here that I feel like our medical staff, nursing staff, everyone is giving extra attention to hypertension. And so I just wanted to say kudos to our staff, and I wanted the board and the public to know the efforts that we're doing to control hypertension.
That's wonderful.
Props to everybody that's involved in that and continues to watch that. It's exciting.
Yeah.
All right, thank you for that quality improvement report this morning and the education that went along with it, so I appreciate that. All right, next, Jeremy, welcome this morning. You are here for our annual financial audit report, and we appreciate your time and look forward to hearing what you have to share.
All right, excellent. So I'll take this off so I can kind of enunciate and pronounce out to you guys. So my name is Jeremy Behrens. I'm a partner at the CPA firm of St. John's in Omaha, Nebraska. We work primarily with healthcare organizations. Our firm works with about 80 critical access hospitals throughout Iowa, Nebraska, Kansas, Missouri, as well as about a dozen DPS facilities. I personally work with about 20 of the critical access hospitals in the state of Iowa, so that's where I spend a lot of my time. I did meet a week ago with your finance committee for about an hour, a pretty in-depth and detailed review of the financial statements. What we're going to do today is a very high level, about 15-minute overview of the results of your organization. And again, because we work with so many critical access hospitals in the area, I also want to try to give you some comparative information to see how you guys are doing compared to your peers. And then lastly, I want to make sure I thank Christy and her team. This year was the first year that our firm has performed your audit. And all things being considered, for a first-year audit, I thought things went very smoothly. On top of all the things that Christy had to do throughout the last 1.5 to 2 years in relation to a lot of the CARES funds that your teams received and a lot of the compliance requirements they had to go through in compiling data to submit into their reporting portal. A lot of my clients, some of their audit preparedness had kind of fallen off this past year. That didn't seem to happen with your team. We were very happy with the information presented to us for the audit. So what we have still right now are drafts of the financial statement and the report to the board. And the reason that we're still in draft form is because your organization, in addition to a lot of critical access hospitals and larger hospitals, received CARES funds in 2020 and 2021. Those dollars are deemed to be federal awards. And any time that an organization receives and expends more than $750,000 of federal awards in a given year, that triggers what's known as a single audit. Now, the procedures for a single audit are very compliance-based. We spend time on making sure that you met the terms and conditions of those provider relief funds. And those are to prevent, prepare for, and respond to coronavirus. So what we have to do is kind of come in behind the scenes and audit some of the documentation that Christy reported to the federal government at the end of September to make sure that those expenditures and lost revenues met the terms and conditions of those funds. We were just discussing before we started here that we want to try to get that done sometime in November. And quite frankly, you might be one of the first ones that we do in terms of single audits for federal awards. So we talked about federal awards. I know this is a little small up here, but this is a very important slide, and I did give you copies of the slides in case you guys want to take notes or follow along. This is a summary of all the federal dollars that your organization received in fiscal year 20 and or fiscal year 21. So at the very top on the left-hand side, you received about $6 million from the Provider Relief Funds, CARES Act, of which you earned about $2.2 million in 2020 and earned $3.3 million in 2021. And at the end of the fiscal year 21, you have about $500,000 remaining that has to be spent for the rural health clinics by the end of fiscal year 2022. Now, in the middle there, the CARES Act Accelerated Advance Payment Program. These were never funds that your organization could earn and keep. These were basically an inflow of dollars from the federal government that were basically a prepayment of future Medicare reimbursement. So these funds will be recouped over about a 2-year period going forward. Then at the bottom, your organization, like a lot of critical access hospitals, applied for it and received a Paycheck Protection Program, that PPP loan that you may have heard about, a $3.4 million loan that you received in 2020, and you received a notification from the SBA, the Small Business Association Administration, that loan was forgiven in fiscal year 2021. So you kind of look down those columns, your organization received about $17 million over the past 2 years from these 3 programs, of which you've earned in fiscal year 20 and 21 about $9 million of those dollars. So the program in itself was supposed to infuse healthcare organizations with cash during COVID to help maintain operations so they could prepare for and respond to the coronavirus. And as we go through a couple of these slides, you'll really see where a lot of that cash infusion hit your balance sheet. So the responsibility of an auditor is to express an opinion on your financial statements. We have a qualified opinion, which is a little bit different from our traditional unmodified opinion. And the reason we have a qualified opinion is because the Shelby County Medical Corporation and the way that is structured, in theory, their results should be combined with the hospital because you're really their only customer. Your team, consistent with prior years, only shows the results of the hospital on their financial statements. No significant disagreements with management, no consultations with outside consultants, no difficulties encountered during the audit. We do have a couple of internal control related matters that we are required to communicate to the board. And this is a repeat from prior years and something that we see with pretty much all our critical access hospitals is segregation of duties. Because you are a smaller organization, you're never going to be able to employ enough individuals in the finance and accounting and payroll department to have complete segregation of duties. So this is more of a reminder to the board that you're part of the internal control process of the organization. You have that fiduciary responsibility to be inquisitive, review those monthly financial statements, and ask questions when things might look a little bit unusual. And then we'll touch on a couple of the audit journal entries that we had here in the next slide. Other services provided outside of the scope of the audit, we do help your team prepare and file your Medicare and Medicaid cost reports that are due at the end of November. And then throughout the year, we did have a lot of consultations back and forth about making sure that we met the terms and conditions of those CARES Act provider relief funds and how those were supposed to be reported here at the end of September. So again, no significant changes in accounting policies or unusual transactions, no changes in management's accounting estimates or judgments. Those are fairly conservative in nature. We did have 4 audit journal entries, and Christy and her team did present us with 7 client journal entries. That sounds like a lot. None of these really give me a whole lot of pause. They were pretty small in nature. The only significant journal entry that we did have, and this is pretty common with our critical access hospitals, is because you're a governmental entity, and so therefore your employees are part of the IPERS program. There's an actuary study done at the end of every fiscal year that we get that data and book a final journal entry based off of your share of the funds, either overfunded status or underfunded status. That journal entry was about $600,000, and that was made after the trial balance was presented to us for audit, which is consistent with what happened last year as well. So that was kind of the boring stuff, the required communications. This is kind of the fun stuff where we could actually look at your financial statements and compare you to some of your peers. This is just a high-level overview of the significant changes that you can refer back to. I wanted to touch on the balance sheet here. One of the things that's a little bit unusual about your organization is you have a very strong balance sheet. We're going to see that here as we step through your balance sheet. You can see 2019, 20, and 21 significant increases in cash positions over those past 2 years, and a lot of that ties back into those CARES funds that we talked about. Remember how we talked about your organization received about $17 million over that 2-year period in federal funding, of which your organization earned $9 million of those and get to keep. And that additional $8 million of accelerated payments will be recouped over a 2-year period.
Do we show that as a restricted fund then, those $8 million? So because it's Medicaid?
So it's on the next slide here. It's in your liabilities. So looking at your liabilities, one of the unusual things about your organization is at the end of 2021, no debt. I work with about 20 critical access hospitals in the state of Iowa, and very few of them have little to no debt. So you have no debt and a very strong cash position, which is a little unusual for critical access hospitals, and that's a good thing. So the next line down, we talk about the refundable advances, the Medicare accelerated payments. That's where you can see those funds that are going to be recouped over the next couple of years at approximately $9 million. So that will drop over the next couple of years. And then last at the very bottom, the net position of the organization, $38 million in 2019, $39 million in 2020, and up to almost $43 million, a little over $43 million in 2021. Kind of hard to see here, but statement of revenue, expenses, and changes in net position or an income statement. Very consistent with what I'm seeing with a lot of my other critical access hospitals. Most facilities had significant increases in 2021 of their patient volumes. Now some of that's related to 2020 being lower. You think about March, April, May, and June of 2020, those months were compressed and depressed in terms of patient volumes because that was when coronavirus first hit. That's when there were state mandates about limiting surgeries and elective surgeries and those sort of things. So most patient volumes decreased in fiscal year 2020, and we've seen a pretty significant rebound of those volumes in fiscal year 2021. Your operating expenses are up a little bit in fiscal year 2021. Some of that's related to the additional volumes in patients, and some of that's due to targeted spending of those CARES dollars because they could be used for expenditures. So there's a little bit of increase in your expenses that traditionally probably wouldn't have happened had you not received some of those CARES funds. Now, towards the bottom third of the screen here, non-operating revenue and expenses. Here's where we see where you earn those CARES dollars from the provider relief funds, $3 million this year, about $2 million last year, and the forgiveness of that Paycheck Protection Program loan of about $3 million. So we go all the way to the bottom to kind of look at your total revenue between the years. 2019, about $1.5 million, 2020, about 1.2, and here in 2021, about $8 million. So your organization's a little bit different than some of my other CAWs, because a lot of those CAWs release a significant amount of their CARES funds back in 2020's audit, where your team was a little bit more conservative about how they release those funds, and more of yours hit fiscal year 2020. But the important thing is, in that time frame, you did earn those dollars and should not have to and will not repay any of those funds back to the government. A couple of key financial indicators. We're giving you some trending information about your organization, about all the 82 critical access hospitals in the state of Iowa. And then we carved out a peer group because you are one of the biggest CAWs in the state. You're one of the top 10 CAWs in terms of size. We give you the averages of the 15 greatest or biggest CAWs in the state of Iowa. So kind of put it in perspective, this is your net patient service revenue. So basically receipts from patient service revenue. You are on the left-hand side here. This is your organization. The median critical access hospital facility in the state of Iowa is in the middle. And then the 15 largest CAWs are over there on the right. So you can see in terms of volume and size, again, you're one of the bigger critical access hospitals in the state of Iowa, where your average facility is about half your size. Tax receipts. Most critical access hospitals in the state of Iowa receive some sort of funding. We talked about how there's 82 critical access hospitals. 41 of those receive county tax revenues. So half of them don't, half of them do. Now for those of them that do, more often than not, boards and management kind of manage to that levy rate, where your organization's a little bit different, where you kind of manage towards the receipts of the funds. So here I've shown you the average tax reimbursement over the past several years up there in blue of the 41 critical access hospitals in the state of Iowa. And you can see how their dollars have increased from $1.1 million to almost $1.4 million in about a 5-year span. Where your facility has stayed pretty steady over that time frame. Now as a board member, to me, that's a pretty important slide, because that tells me, and as a community member, that the facility isn't gaining reimbursement through tax dollars. They're kind of holding the line and towing the line there in terms of what they're receiving in tax receipts, where other organizations are receiving 3, 4, 5% more every single year, and it's kind of compounding on them. The highest critical access hospital in terms of tax receipts receives about $4 million, the lowest about $400,000. And you can really see it here when you talk about the levy rates. So these were the dollars you received. This is the levy amount per $100. Your organization, that number has continually decreased because you've managed to the dollars, not the levy rate, where everyone else has kind of kept their levy rate the same, but the amount of money they've received has gone up because of tax valuations.
I'd say one thing here. So we've tried to keep our like Jeremy said, our collections the same, and it looks a little bit higher this last year. And as we found in some of our receivables, and you maybe heard this in the media, that's a little bit higher in 2021 because of some collections of past due on property taxes. We've seen it in our receivables. We've seen more people, if they stayed home and not spending money on other things, also take care of more medical bills too. So that's really the increase there. We still kept the levy where we anticipated from current property taxes that it would be the same.
Right, and you can see that decrease in the levy ask there. So again, as a board member, to me that's a pretty powerful message that your organization really cares about the tax base and the community members, and you're not passing the buck along to them. Days cash on hand. This is a calculation of how many days your organization could stay in business without receiving additional tax or patient service revenue, tax receipts, interest income, any other additional receipts. When I take your expenses divided by 365 days, your organization spends about $118,000 per day. Take that divided by all the cash on hand, you have about 282 days cash on hand at the end of fiscal year 2021. Now, you look at your peers, and again, we're always a year behind here because it's based off of filed Medicare cost reports. We haven't filed 21 yet, so we don't have all 21's data. So we're always a year behind on our peers, but you look at how the days cash on hand for every other organization in the state of Iowa increased in terms of hospitals, well, that's that infusion of CARES funds. All those facilities received CARES dollars in one amount or another in fiscal year 21. So that program, you can see here, kind of did its job. It pushed cash into the critical access hospital system. Days revenue and accounts receivable, this is kind of a metric of your business office. How fast can your team turn a claim into cash? Now, not uncommon with my other critical access hospitals that I work with. 2020, pretty much everyone was down. And again, March, April, May, June's volumes are down. So my collections are down, my revenue's down, my receivables are following suit, and they're down. But then what a lot of organizations were doing, because they didn't have a lot of claims to process, they were really focusing on going back and working some of those older claims, either writing them off or, reworking some of those denied type claims. What I've seen from my other causes in 21, that number has risen. It kind of got back to their normal number. Where your organization actually went down another step. So that was a little bit different than what I've seen from some of my other causes. They got that 2020 bump down, but then it went right back up in 21, where your organization kind of continued that trend. I know I haven't spoke to your group in the past, but when I talk to boards, I always want to reiterate the fact the best way for a critical access hospital to make a margin is to have outpatient commercial volume. Medicare and Medicaid, in theory, pay you cost, right? So their volume's good because it lowers cost per unit, but you're not making any money on that volume because they're reimbursing you all your cost. Inpatient is a very costly service. So the best way, again, for a CAH to make money is outpatient commercial volume. So that's what these next couple of slides kind of point to. One of the positives for your organization is that 88%, or in the past about 87% of your business comes from the outpatient setting. So that's a good thing. That means more of your volume, when patients come through the door, they're in that outpatient setting, which is an opportunity to make a margin, okay? Now, what we want to see happen is we want most of that volume to be non-Medicare, non-Medicaid, meaning it's commercial outpatient. So this is a calculation of what your percentage of outpatient volume comes from Medicare. Fairly consistent with your peers. What we don't show here is your Medicaid percentage is only about 15%. Most critical access hospitals are around 15 to 20%. So when I take your Medicare plus your Medicaid, which doesn't show up on a Medicare cost report, and add them together, about 58% of your volume comes from Medicare and Medicaid. Meaning that about 42% comes from private pay or commercial, which is your opportunity to make a margin, which is a little bit better percentage than I see from a lot of the other critical access hospitals. So that has a lot to do with what your income statement over the past several years, if you go back and look at it, you've always had a pretty good bottom line, and a lot of that comes from your outpatient commercial volume. You have a very strong payer mix here in your community, in your organization. And my last slide, debt to capital. So again, I talked about how I don't see a lot of CAHs with no debt or very little debt. Here you prove it, okay? About half of the critical access hospitals in the state of Iowa carry some form of debt, and significant debt, where they're fairly highly leveraged. So they might be in fairly new facilities, or just have old debt that they just haven't been able to pay off, where your organization at the end of fiscal year 2021, zero debt, which is a little unusual, especially with such a strong balance sheet. So we went through a lot of information there in hopefully about 15 minutes, because that's what Barry said I had. I usually go over. But again, we kind of spent an hour or so diving into some additional ratios, diving into some of the financial statements and their disclosures at the Finance Committee meeting. But are there any questions that I can answer for the main board? The full board, I should say.
I'm sure you guys want to robust discussion when you
We
met?
did, it was a good discussion, yeah. I appreciated the detail that you
Oh, so
gave.
you're the man behind the screen?
It was, yeah.
Okay. He was remote, and I did,
Yeah.
excellent.
How many facilities use that? Can you break that down maybe, like their CARES Act in 2020 money versus, 2021?
Sure.
Like what is a percentage of what?
So I would say, again, it was supposed to be based off of lost revenue or expenses.
Okay.
So a lot of organizations really push that lost revenue narrative. I'd say probably of the 20 that I work with, I'd say about quarters of them probably spent about 3/4 of their CARES money in fiscal year 2020. Where your organization didn't. You probably spent
We
about...
still had a good year last year.
Yeah, you spent,
Really.
right there, $2.1 million of your CARES fund, $3.3 million this year. And some places had that PPP loan. They all forgave those in fiscal year 2021. In fact, I have some cause that didn't get their notification until July 2021. So they're still carrying that liability on their balance sheet, and that will get released in fiscal year 2022.
There was still a lot of a lot of information coming out exactly what the regulations were going to be with those CARES money, so we chose to be a little bit more conservative with it because we didn't want to have to
Pay them back.
basically
Yeah.
take it back and
Christie's really kind of underselling that. When they received, so you didn't go out and apply for these dollars. So if we can take a minute and just kind of touch on this. These funds showed up in your bank account in April. They just showed up. I would get calls at like 7 o'clock in the morning. Hey, we just got $3 million. What is this? I don't know. Let me take a shower and grab some coffee. Let's figure this out, right? So what had to happen was you had to agree to these very vague terms and conditions. When you received those funds, you said, yes, we will use them to prevent, prepare for, or respond to coronavirus. That's the only guidance your facility received. And then slowly, over time, in April, May, and June, there was frequently asked questions that kind of elaborated on that very vague guidance there. They talked about, okay, now it can be used for lost revenue. Okay, well, what's lost revenue? And that description changed 3 or 4 times throughout the process and really didn't get solidified. So what was supposed to happen in January 15th of 2021, they were going to give you 30 days to go out to this reporting portal and tell them how you spent the funds. Well, that day came and went. And then on January 15th, when that day started, they came out with additional guidance that had additional clarity on some expenditures and gave people additional time to spend those dollars. So all through that April, May, June timeline where people were releasing funds for lost revenue, because that was one of the more concrete kind of opportunities, they were really pushing that narrative. Where, again, your team was fairly conservative, so let's let this kind of play out a little bit. We're going to have time to report on it. We want to make sure we're doing it right, because we don't want to not meet the terms and conditions of the grant, the funds, and pay it back. So that it was kind of a living, breathing document calculation all the way up through about January or February fiscal year 2021. Then they gave organizations until the end of June 30th of 2021 to spend those dollars and then report on those dollars all the way up through September 30th. It was a bit of a nightmare.
How long are you anticipating that additional single audit to take?
Not too long.
Okay.
Now, here's the next piece of it. As of today, the 26th.
Yep.
Today is the final day, so that was kind of phase 4, phase 1 funding. There is additional funding available to rural facilities, and that, unlike the original funds, is an application process. I think Christie finalized that application yesterday. There's an additional $25.5 billion available that's really targeted to rural organizations, and it's based off of applicants, and then how much your mix of Medicare and Medicaid and CHIP volume you have compared to the other applicants. But quite frankly, I would consider $1 million or so more dollars, hopefully will come to your organization, that you'll have to spend before the end of calendar year 2022, and then report on in the first quarter of 2023. So there's additional funding out there available in kind of this last wave, this phase 4 is what they're calling it. And we'll kind of have to go down this road again. But again, we go back to that days cash on hand slide, and you can see that the program did what it was supposed to do, right? It gave facilities cash to operate in those months where March, April, May, June volume dropped by 30, 40, 50%.
Well, that's the one I was talking about when I asked about how much percentage of the people that used it last year. Because if you look at it, ours was 196 days on cash in 20, and then you compare it to a cost report of 272. That's the reason I asked that, about how many used that money in 2020.
Days cash on hand was just the infusion of cash, whether you used it or not.
Okay,
I was more talking on the income statement side.
okay.
Right. So the one thing that
So
was
that
a
was
little
the plan.
unique for your organization, why yours bumped in 2021, is because you didn't initially take out that accelerated payment of about $9 million. That was requested in fiscal year 2021. A lot of CAUs took all three of those in fiscal year 2020. The CARES funds, the PPP dollar loan, and the accelerated payment. They got all three of those in 21 or 2020. Where your organization spread that out a little bit over
So
the
what do
2
you
years.
think those critical actions for 21 will look like once they file their...
Their days cash on hand?
Yeah,
Consistent or lower?
okay.
Because some of them have chosen to pay back those accelerated payments. So got it in, held it, we don't need it, we're paying it back. Or they've had less of a volume rebound, and so where your organization had a pretty good rebound in volume in fiscal year 2021, some places didn't quite have that bounce back, and so they had, traditional operations and spent down some of that operating cash. For me, as a board member, my big takeaways are this. You have a very strong balance sheet, right? Because you have a fairly significant cash position and no debt as of now. Now, obviously, you're putting money back into the project or the facility with your capital project going on behind us. And then you have a fairly robust revenue cycle. You have good days cash on hand. You have low days in accounts receivable. And then again, talking about that tax levy piece, you're not passing a buck to your community members. You're funding operations through operations, not through additional tax receipts.
Great. Nice job, Chris.
She
Thanks
did
all of us.
do a very nice job.
All right, thank you.
Good questions. Anything
Anybody
else?
have questions? An acronym question from your opening comments, Jeremy. I know what CA means, but I think you said you work with a number of PPS facilities.
Right, so critical access hospitals are your small rural
Right.
facilities, 25 beds or less. The PPS facilities are basically your larger facilities.
Oh, okay, all right.
They don't get cost-based reimbursement.
And they don't get cost-based
I-
reimbursement. They just get volume. They get what they get, they don't throw a fit, that's what they get.
Okay.
Where your organization's a little bit different because you're cost-based,
Yep.
and you have a bit of a settlement at the end of the year,
Yep.
which is one of the bigger estimates that Christie has to work through.
Acronyms throw me sometimes.
Well, we love our
The background,
acronyms.
I know,
Here.
it's the way you do it, so.
And I've been doing this for about 20 years, so I kind of throw them around and don't think about that sometimes.
All right, Barry, Christie, any other comments?
They did a great job, they're very helpful. We've worked with Sign for several years, and some of our consultations with our licensing and stuff, so team was very good in understanding of us changing systems, changing auditors, and coronavirus all in the same year.
I'm from a very small town. This is all I do. I work with, 75% of my time is working on hospitals and doing audits for critical access hospitals, because Thursday night I get to go back to my small town, their little critical access hospital in the corner of southeast Nebraska. These are the people that I like to work with. This is kind of what draws me. I love working with critical access hospitals in Iowa and Nebraska.
Appreciate that.
Thank you.
Absolutely.
We'll just keep riding this wave right on past everything that you just talked about. Thank
And
you.
my contact information's one of the first couple slides there. If you have any other questions that come up, feel free to reach out. I'd love to give you an answer.
Nice job to you and your staff putting that together.
Oh, thanks.
So this is a draft version, so we've heard the report. We're not accepting this today. We'll get the final sometime January-ish.
Hopefully before then.
I knew you said you were hoping to finish up that component in November, so.
And we couldn't start that until the information was submitted in the portal. at the end of September. And they got an extension on that, but your team didn't use it. You were one of the first ones to file, so that was good too.
Great.
Thank you.
Thank you, Jeremy. Personnel Committee, credentialing report.
Okay. Basically, we have a total of 5 initial appointments. They're listed on the agenda. 3 reappointments, and we have no voluntary withdrawals for the month.
All right, any questions for personnel? I guess really, I would entertain a motion then to go ahead and approve the slate of credentialed applicants here.
I'll make that motion to approve it.
Thank you, Rick. Is there a second?
I'll second.
Any discussion? All those in favor, please say aye.
Aye.
Opposed, same sign. All right, credentialing is approved. Okay, continuing on with Barry, CEO report and discussion. I mean, they probably go together, but Barry, CEO report to start.
Yeah, I wanted to talk about, we did get the bids back on the cafeteria gift shop project. The board gave approval to go out for bids at our last meeting. And so just to give you a little refresher on what we were expecting, and this was based on the architect's estimates. So this is what our cost estimate was going into the bidding process. Total of $554,000 with construction of $275, equipment furnishings of $160. We did have a large contingency of 15%, so that's $65,000. Architect costs of $53,000. So if you go to the next slide, this is what our bids came in at. So as you can see, the construction cost part of this is more than double what we had expected, with a total, low bid of $699,000 through Graphite. Graphite's the company that's doing the central utility plant project. But yeah, it's more than double of what we expected, and then the total project, when you add in equipment and furnishings and architect costs, would be over $900,000.
And no
So-
contingency then in there either, then, right?
Correct.
There's not a contingency, and we would probably want, it wouldn't need to be 15%, because part of that 15% contingency was based on what the bids would come back as. So we would want at least 5% added into that. But we're not really wanting to recommend anything at this time. We don't want to accept these bids. We're looking at, I think it was $450 a square foot, which is way higher than what we had expected. Some of the discussion with the architect, and they have talked with the bidders a little bit. I think there's a little bit of this. It's the workforce shortage, supply chain issues. I think there's some of it that's related to that. I think the exhaust system for the grill and the fryer came in a lot more than what we had expected as well. There are some things that we're talking about that maybe could be done different and tie into a different exhaust system. We're going to talk with the architect and the engineer over the next month or so regarding that. But this is a project that, we don't have to do it at this time. I think what we would like to do is split off the gift shop part of it. We don't have to do the gift shop either, but we would like to move forward with that if we can figure out how to do that internally. Maybe work with some local contractors and get that part of it done. That should be well under any public bidding requirements. So we're gonna look into trying to continue that gift shop and get that part of it done. Get Julie moved into where the old gift shop is located. But as far as the cafeteria, right now we want to kind of defer moving forward on that and potentially include it or rebid it out, maybe on its own or possibly with a larger project, included in with a larger project. We are looking at the emergency room, and we did apply for that USDA grant, so we're kind of thinking the end of November, we'd have a pretty good idea of whether we got those funds or not. So that's what we're looking at with the cafeteria. We're not recommending that we approve any bids at this time. Any questions regarding that?
Seems like the prudent thing to do, and then
The hospital, the regional hospital settlement, or whatever you call it,
those partners or Southwest Iowa
Yeah.
Distribution.
that will be a part of, or not?
Yeah, I was going to talk about that. So I talked about that last
Yeah, but you didn't
month,
know the amount.
that we
yeah.
were going to get between 300 and 500,000, and we intended to use that for the nuclear medicine.
Oh, that's what it
project.
was for, okay. yeah.
So we did, our board did meet, the CEOs of those 3 hospitals did meet 3 weeks ago, and we did approve 500,000. So each hospital would be getting a distribution of 500,000 from Health Partners of Southwest Iowa. That'll more than cover the nuclear medicine project, and then we'll have some additional funds that we could use for something else. But
Does that include the sale of that machine then in there?
no.
Okay.
Well, I mean, we're anticipating we'll sell that, the old mobile unit. You mean?
Yeah, that's what I was saying.
And we think we'll probably get around 100,000 for it. So we're kind of anticipating that with the distributions
That's factored into
that we
that.
agreed
Okay.
to.
Okay.
There will still be, after the sale of that mobile unit, there'll still be about $500,000 in that Health Partners, the Southwest Iowa organization. So they'll have dollars there for any future ventures that we come up with.
And they're still helping with our credentialing, correct?
Yes.
Yeah.
Yep. And the payer enrollment and the credentialing.
Good.
So, just a couple other items that I would bring up. Related to facilities, the Senior Life Solutions move will be happening sometime in November or December. That old behavioral health building is complete now. We've got a few compliance things we need to finalize, but that will be happening very soon. And then the windows for the Rural Health Clinic, that project will start in mid-November. And they kind of anticipate doing either about one pod at a time, 1 to 1.5 pods each day, and they'll just keep going from pod to pod until they're done. It should take about 3 weeks. They've Kim and I know Paula and Jeff, I think, sat down with the contractor and Drew and kind of laid that out, how we're gonna phase that out.
Atlantic Glass.
Okay.
Good. That would be nice because that's a visual that a lot of people see and
Yeah.
they're in bad shape.
And then just the last thing I would bring up, insurance. I kind of indicated this to some of you that we renew our insurance, property and liability, and our cyber liability insurance January 1. And we did have our first meeting with the broker, and we know that costs are going to go up. Premiums are going to go up significantly, probably 20 to 25%. On the property side, everything's costing way more than inflation's really hitting anything with regard to buildings and facilities. Cyber liability, that's gone. There's just so much cyber crime out there that it's hard for these insurance companies to even provide coverage.
What do they offer in that form? Can I ask that
What?
question? What do they offer for cyber protection
I
insurance?
think our limit, right, are we at $1 million right now, or? I think we're at $1 million of coverage right now.
Of actual loss before they kick in?
What's that?
Is that what you're saying? Is that a deductible then, or
The
that's what they'll
deductible
cover?
is 20,000, I can't
I
remember.
want to say it's 25,000.
Yeah, it's
But it's-
around 15, 20, 25,000 is our deductible, and then the
And then
max.
the rest
is
of it's
the-
lost revenue and cost of expenses
Yeah.
to fix?
Pretty important.
It is, yeah.
So we will be seeing that go up significantly, and we'll kind of keep you in the loop on that moving forward.
What about health insurance? Do you have any idea of what that'll cost? Like,
I think we anticipate about a 7% increase in our health insurance costs. We did talk about that, Jill talked about that at the previous board meeting.
sorry.
So I think that was right, 7%?
Yeah, 7.5.
Just a question beyond what you've talked about, but, so the pool is drained, Peterson Family Wellness Center, about 8 weeks on the restoration or the liner installation. Any more problems or anything else show up once the water was out?
Not that I'm aware of.
We were
hearing,
Jeff.
Yeah, there was a few places where, it's a concrete and then there's a surface over the top of that. That surface had separated, so at least yesterday they were chipping out some of those holes and have a plan to patch those back so we have a nice smooth surface to put the new pool liner on.
Yeah.
So that was it. Other than that, a little bit of paint here and there, but it's looking pretty respectable.
We did know that there were those holes in it before.
Yeah.
Right, that was the reason, sure.
That was one of the reasons we've done it, so.
Well, it's great to see progress going on that, so between the window replacement and the pool liner, that will be 2 major accomplishments by the time this year's over with, so.
So is the lazy river still open then, people in that hot tub?
No.
That's still all
Yeah,
closed?
it's all one water-based source,
Okay.
so, yeah, no, the lazy river is closed, the pool's, hot tub is closed, the hot tub will get a new coat of paint, and we're doing that in-house,
Good.
so,
So you can't go float after today's work day?
no.
Good.
Good. Anything else, Barry, then, from your comments this morning?
No, that's all I have.
All right, thank you. Christie, the financial piece, approval of the monthly financial statements. Want to run through all those?
So the recap, so for September of 2021, we had almost a little over 5,700 outpatient behavioral health visits, 530 visits to the ER, 115 surgical procedures, and almost 4,000 physician clinic, RHC clinic visits. Average daily census went up a little bit in September of 11.44 patients per day. Some of that is driven because our births have continued to increase. We had 5 in September. We've had 20 year-to-date in births compared to 12 last year, and we expect to continue to see that increase. I think November is really a busy month too, so we'll see that here in November also. So we did have we did have some increases yet from September of 2020. You can see it was almost 4,700, almost 1,000 more outpatient visits, quite a few additional emergency room visits. So again, kind of picking up that steam again, even from September of last year. We had almost 17,000 visits in the first 3 months of this year to our outpatient and behavioral health. Over 1,500 emergency room visits, 358 surgical procedures, and almost 12,000 in visits to the RHC clinics. And we have an average daily census of 10.58 compared to 7.66 last year. So again, continue to see increases on almost every area that we have there. So for September, we had 3.9 million in revenues, just a little under 3.9 million in expenses. So we had approximately 75,000 in operating gain, and with our other resources, we had 93,000 in September. And year-to-date, for the first 3 months, we have 218,000 in operating gains from operations, and other non-operating revenues gives us 561,000 net income from all sources for the first 3 months of 2021. In 2020, we had a $332,000 loss. So as you can see, we've continued to rebound and increase our services, and as Jeremy mentioned, work very hard on trying to get those outpatient visits in the door. Again, the financial report, the balance sheet's still very strong. We've started to pay in September, first part of September, that almost $9 million we got in advancements. They're pulling some of that back every time we get a repayment from Medicare, so they will keep 25% of that. If it hasn't been an issue, we worried, made sure that our processes were in place to make sure that got accounted for correctly, and it hasn't been an issue. So realistically, there's not any reason for us to pay that back prior to when it's actually due. So we'll continue to monitor that.
So it's just like a loan, they're pulling a
Yes.
portion of it back all the time?
Yes, no interest.
And still paying you
Yep.
for your services?
Yep, but at a reduced rate, so basically we're using up that advancement as we go. AR, we continue to work on trying to get our AR days down. We'd like them lower, even though we're comparable. We work really hard at trying to get everything paid in a timely manner. No debt still, so looking good. Any questions on the financial reports then?
Our public should feel really good about that no debt thing. It's a really important piece to our hospitals that we're positioned very well.
Yeah, we're anticipating, we've planned that the CUP project would all be paid for from
Out
internal
of
funds.
cash.
So we'll see a little bit of decline in that, but still no debt.
Great,
It's so notable that we are paying for operations
it is.
out of operations and continuing to be able to do that. Okay.
And still have a nice facility. I mean, that's up to date.
Right. Approval of the monthly financial statement. Entertain a motion, please.
Also move.
Thank you, Tom. Is there a second?
I'll second.
Thank you, Janine. Any discussion? All those in favor, please say aye.
Aye.
Opposed, same sign. All right, we'll move on to payroll and claims for September. Everyone has got a copy of that. Any questions for Christie? Comments, Christie?
No questions.
We'll ask for a motion for approval.
I make that motion.
Janine moves. Is there a second?
I'll second.
Thank you, Rick. All those in favor, please say aye.
Aye.
Opposed? Motion carries. All right, any other business? Ruth, need anybody for anything? Okay. Wow, 1 hour.
Record time.
57 minutes if we really started at 7:33. Entertain a motion to adjourn,
So moved.
Jen's moved, second.
Second.
Rick, second. All those in favor, please say aye.
Aye.
Opposed?
Aye.
We are adjourned.